BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi.
Good morning, everybody. It's a nice green Monday for the most part. Lovely and green. Nice move on Solana, by the way. If you're in the Telegram, it's not very often that I say stuff, but in fact, we talked about that on Friday. Actually, I said when we were doing the Patreon live stream, it did look like pretty much the best, one of the best charts out there. But as far as a chart with a good degree of certainty that it was going to break out, and I think it's moving up to a new local high, probably a new all-time high quite soon. Got myself a 25x leverage position on that one. So obviously, I wouldn't advise anyone ever do something as mad as a 25x, but I was in the right place at the right time and the stop loss is in profit. So that's that. Right, let's just talk about Bitcoin basically, as it is Monday, and we'll have a look at stocks as well, and Dixie and stuff, because, it is the beginning of the week, and there's a few things to think about outside of the chart. The first thing is Bitcoin broke out. So we were still watching this yesterday, weren't we? The breakout. So I said we got the hit, and then we got the breakout. This is yesterday's video, basically. I think it was this candle here. I said, look, a closure from here starts to look more and more like a breakout and a continuation. That's what we're getting. And like any consolidation, when you break out, you've got your different areas. There's your first. That's your first area to break. Once that's broken, really, you're kind of looking for the upper 70,000s. I mean, the lower 70,000s, around 71 to 72, and then from there, yeah, the all-time high around 74, we'll call it, and then the top of this range. So it's increments on the way up. So the 4-hourly does look good. If we want to pull back, we can. There is no pump signal or anything like this. It's just a breakout from the symmetrical triangle, which we used the 200 exponential as the bottom, because we didn't actually come down to revisit the low. We still might do that, right? I can still imagine that happening. So let's not get too complacent. The breakout was real. I still think that we're going to sort of break out of here up to this next level before we break down. But if we do start to come down, it's 65,350 is where we'll be hitting. Basically, that 200 simple and exponential. No, not that. It would be the 20 moving average on the 4-hourly. What am I talking about? This coffee is weak. It's Aldi coffee, and I didn't have enough of it. I've run out. Right, so what we're looking at here is the daily pushing the 20 moving average. So that adds more weight to the fact that this particular line is a major resistance, and again, we've already hit it today, so that basically is it's just short of 78,000. 68,000. 1, 2, 3 candle bodies, 4 yesterday and a 5th today. So look, the more likely it is the more times you push a resistance, the more likely it's going to break it. Same deal with the support. So we're pushing it again for a 5th time, getting a support on a 10 exponential, which previously was 1, 2 resistances. Let's check the momentum over here. So it's still consolidating on money flow index, but the RSI, even though it doesn't look like it, it has broken out. This is a breakout of RSI momentum. So that's quite good. And histograms are slowly ticking back up, but they're in the red, but we are above the 0 point. So when we do finally make that positive cross, up and away. So the idea for me across the board now for everybody is that this is bullish for the market. And if you break here, it's particularly bullish for the market, but right now it is bullish for the market. So we'll look at Ethereum, what's going on with Ethereum. Ethereum's managed to get back up above all moving averages apart from this 200 simple moving average. Look at that. I think that's a glitch, to be honest with you. I'm not convinced that the money flow index has shot up that quick, but I suppose stranger things can happen. It's weaker than Bitcoin based on the daily, because the daily has already revisited its 20 moving average, whereas the Ethereum is sitting at 21. So I suppose it's like a delayed fuse, but it still points to the fact that Bitcoin is the leader and Ethereum is not leading. Ethereum is the shadow of Bitcoin at the moment, and it still has been. That's not to say that you can't make money out of any altcoins. When the market moves up, generally speaking, you'd expect everything to move up, but it's not. This is not better than a Bitcoin chart. We won't even bother looking at XRP today, but you know what I'm saying. These things happen. So let's have a think about stocks. We've got the S&P futures down, actually. Now, this is something I was going to start alluding to, right? So I'm a little concerned. Someone touched on it on the Patreon on Friday after the situation that was occurring at the time in Moscow. So, at the time I didn't know enough about it. It had only just really happened. The implications financially for, global markets, a little unclear for me. I think they still are, but I wouldn't call it a massive black swan or anything like that, but there might be some negative movement in the market depending on how Russia decide to respond. Now, I've seen, and I try not to even listen to any media these days because you just don't know what's real and what's not. You got no idea what actually is going on in the world. It's just people talking, isn't it, really? But there is let's just call it, there is articles and information to say that Russia's preparing something big, which is probably going to affect the markets. Let's face it, Russia can affect the markets by doing something, and I don't know what it is they want to do. But any major change in this already unsettled environment globally is going to start to affect the markets, especially as markets are all peaky, basically. I'm not saying that they're at their tops, but anything could mark a top at the point right now. Don't ever get complacent. Look at the S&P. Look at this beauty. All the way up, 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 up. That's all it ever does. That's all it knows. Same thing with oil as well, to be honest with you. Oil, still within a descending triangle formation. I love oil. I had some really big leverage positions on oil. I've took them off the table now with all this bearish divergence that we see and hitting the resistance over here. So I'm not super bullish. I'm not super bearish. It's just when there's uncertainty in the markets, from a fundamental perspective, that's when things can really go bad. Things can just drop, and they're not present particularly on the chart. Now, we do have warning signals on the charts. They are saying we're high, we're toppy, we're, or I wouldn't say toppy, but we are high, and we've been high for a while. I'd just be a little careful, given the gravity of what could take place after such an event. So, but again, I'm not suggesting that something will happen, but it just takes some. I'm trying to think of the right word for it. Really, it stops you from being as bullish as you would do based on what you see on the charts. So it's the same thing as when I got out of crypto in 2022, or was it 2021 when I got out? It was basically when, I think it was 2021, or it might have been 2022, I can't remember exactly. I think it was 2021 actually, towards the end. Bitcoin was coming down. It had already marked its peak, but I hadn't quite recognized that for what it was. But when there was this new Omicron creeping around, I was like, all right, okay, fair enough. I'll take a fair whack of chips off the table, and we did see some market reaction to that, but it also marked a peak generally. So I'm just going to sit back and sort of be careful, given what happened, over this weekend and what might happen looking into this week. Gold would be affected, obviously. Has gold just marked a new all-time high? I think it has, hasn't it, really? So, I mean, if you're ever going to get a savage pullback from anywhere in the markets, it's going to be from an all-time high, isn't it, really, or from a significant high? And that's where we are. And this obviously will feed into Bitcoin's price and whatever happens with Bitcoin. It's all part and parcel of what's going to happen here, so... It's not a very useful video for you, I appreciate that, because what we're looking at is potential breakout and continuation for Bitcoin and everything looking good, but we are at resistance, so chips off the table for a minute, see if we break out. If we do break out, we should be breaking out and continuing further. And we can scalp this market, we can have a good old time scalping and playing with it. But to be complacent as we lead into the halving, when weird things are going on in the world, let's not get too overexposed. So, I've been in, I'll say a cash position of about between 60 and 70. I've reduced that this morning, just to let you all know, I've reduced it this morning. So I'm in about an 80% cash position at the moment, and I'm playing more derivative plays. And you might think, oh, that's riskier. It is and it isn't. Stop losses are a lot easier to manage, and you know, smaller trades, as you know, can be leveraged, so they feel like bigger trades. And I'm in a much larger cash position for buying spot later. So that's the reason behind, you know, the method behind that madness. But I think this week should be one of wariness, just generally, more than ever actually, because there's things that are not present on the chart. But it doesn't mean that the charts can't be taken seriously. And if we are going to take them seriously, it's as simple as this. Bitcoin pushing resistance. If we break it, it's going to be good. Ethereum pushing resistance. If we break it, it's going to be good. And some of these charts are obviously broken up completely out of resistance, and we should be looking for continuation, which is why, again, I feel like futures and derivative plays are more acceptable for me. And I'm happy with those scenarios. Right, I mean, that's basically it. A nice rambling video for you there. Fear-mongering. But that's not my intention. I have to fear-monger to myself to make myself recognise the dangers that these markets can present. Hidden dangers that are not present on the charts. Right, I'll leave it with you there. Thanks for watching, guys. Hope you have a nice day. Take it easy.